everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of January the 9th, 2017. Now, to get started, we're going to begin where we always do with the US dollar index. However, after every non-farm payroll, I always do a quick review here so everybody can get a good understanding of what's actually going on with the labor situation in the US, because it is very important. Now, we're going to hear a lot of different things about this labor report, that it was good, it was bad. In my respectful opinion, it was actually fairly decent. Now, you'll see here that I'm looking at the Bureau of Labor Statistics rate from the U.S. Labor Department. We were 9.3 million last month. In December, we are 9.2. We are absolutely moving in the right direction. Now, earnings are up on a wages are up on a 2.9% overall on the year. That again is US dollar positive, along with a lower U6 number. Now the U3 number, it's a headline number, a survey number. It's really not that important, guys. We did get some upward revisions in the past months. So the key thing to focus on here is the fact that the U6 number is lower, wage growth is higher. This puts the rate hike potentially back on the table for March, again, in my respectful opinion. So even though our headline number, the U3, was a little soft, the U6 is quite good. So with that said, in my respectful opinion, again, it is very likely that the US dollar will turn around here by Tuesday or Wednesday of next week when real money comes back into the market. We're done with our holiday short week. So looking at this, we can already see that our predicted RSI from VantagePoint is starting to turn the other way. Now, the one thing I love about the VantagePoint predicted RSI is it is a leading indicator. We're not looking for a crossover here. We're looking for a momentum-based indicator, and we can see that momentum is shifting here. Now, a lot of cases here, what happens with the non-farm payroll, it's a classic case of buy the rumor and sell the fact. So once we got the ADP report on Thursday, that suggested a softer and a non-farm payroll number on Friday, which in theory we got based around the headline number only. But when we look under the hood of this number, we see a very different story here, as I've talked about at the start of this webinar. So in my respectful opinion, we are going to retake the VantagePoint 18-day predicted EMA at 102.35. There's a better than 70% chance that the dollar will regain its composure here and start advancing back higher. Now, our strength indicator we can see is already bouncing higher. I believe by Tuesday and Wednesday, our neural index will follow along with our short-term crossover. Now, if we look at that short-term crossover right now, it's already starting to turn higher. Our medium-term crossover is down. Our long-term is crossing over to the downside. But again, a classic case here of buy the rumor, sell the fact. We're in a holiday short week. Real money is likely going to react to this. Now, in most cases, what a lot of analysts are looking at a number of different things in their analysis. They look at Gann, maybe Elliott wave, Fibonacci, all kinds of different wild and wacky older theories of doing analysis. But when we look at intermarket correlations, the US dollar index has, for the most part, follows the S&P 500 up and down. So when we look at this, the S&P 500 is still advancing higher, and as long as it's going higher, as long as the DAX 30 and the Nikkei all continue to move higher, this is all US dollar supportive. So when we look at the fundamentals and we combine them with the advanced intermarket technical analysis, we see a picture that actually points to a stronger US dollar. Now, of course, nothing is 100%, but when we're looking at the fundamentals, we're looking at advanced intermarket analysis, all of these things point towards further dollar strength. And indirectly, for anybody watching this that's trading equities, it's also pointing towards a stronger potential equity market. Now, we have a very, very powerful resistance here. That is indisputable, sitting up here around this 2280 mark. Once we break through that, if we break through that, we get above 2300, then we're probably going to see the global indices going higher. So remember that when you're thinking about your Forex trade, not only do you have a potential good Forex trade here with the dollar, you've also got a pretty decent equity-based trade. Now, as we come into our major commodities, I don't think they're going to enjoy the same kind of success that the equities are going to. The dollar, again, taking that bit of a hit at the beginning of the week, pushed oil up right off the bat to start the week. We got a big spike up here towards that $55 a barrel mark here. But guys, we've been here before, and this is what we need to take note of. So your order flow traders are coming in and selling up in this area here, and they were sitting there just waiting for oil to move higher, and they literally pounded it right back down. That's what real money does, guys. So we always want to make sure we're keeping an eye on that. Now, the VantagePoint software actually is fighting them quite strongly, I might add. Our Neural Index is higher, predicted differences are all higher, and we're holding above that key 18-day predicted moving average coming in at 52.77. I do anticipate we are going to be testing that this week and potentially breaking below the $52 per barrel mark. But again, if we're going to see a big spike up in oil, and a lot of people I know are expecting this, only in my respectful opinion, it's unlikely we're going to see that probably until March, April, May. That's when oil tends to rally. So for now, we continue to play this range. We would buy down near the VantagePoint 18-day predicted EMA or near this trend line that I've drawn in here, and we would sell the top here. Now, if we get a sustained break of that $55 per barrel mark and we break through this trend line resistance, then and only then are we going to see oil go higher. Now, commodities likely are going to take a hit here, potentially right across the board, particularly oil and gold, or oil, gold, and silver next. Maybe not oil, but gold, silver, iron ore, your metal-based. They're likely to take a hit. Now, we've got we did have a very good buy signal here from VantagePoint, but a lot of this was again based on buying the rumor, selling the fact that we're going to get that weaker non-farm payroll number. So as the market's building into that, they're dumping out of the US dollar and they're going into gold. That's the intermarket correlation. So if the dollar does start to advance higher, that's going to push gold lower. It's going to push silver lower. So we have to be careful of that. Our key VantagePoint level comes in at 1161. We're closing very close to that at 1173. I anticipate we will at least test this area to begin the week at 1161 and potentially break through this level by Wednesday or Thursday. So keep an eye on that. I think there is a short on gold at least for a couple of more weeks until we determine what the Fed is going to do. But again, to be clear, the information that we've got here that I've reviewed on the non-farm payroll number, the jobs report, it's actually a fairly decent, it's not a great report by any stretch, but it is a decent report. And again, if the market does interpret, if your major players do interpret that report the same way I have, then gold will move lower next week. Now, with gold moving lower here, guys, the one thing we want to understand is the critical VantagePoint intermarket correlations and what they look at 25 to 30 other markets when they're forecasting the target market. Gold has a very high correlation to certain currencies, the euro, the Swiss franc, the Japanese yen, along with the Aussie and the New Zealand currency. So when we look at this, it doesn't surprise me one bit that we're failing up against this trend line resistance just under the 106 level. Now, our critical VantagePoint level for next week that we want to be aware of here is the 104.92, the VantagePoint 18-day predicted moving average, and its counterpart here, the 8-day at 104.86. I believe both of these levels will be breached probably by midweek, and the euro it's entirely possible that the euro will continue back in its downtrend, at least while we try and figure out if the Fed is going to hike or not. Now, our predicted short, medium, and long-term differences already starting to move lower, picking up on that. Predicted MACD still firmly below the zero line, and very important when we look at that predicted RSI, how I've taught many people how to use this particular indicator, and I've talked about it repeatedly here on Trader Planet, that basically we're looking for, if we have momentum, we're looking for a break of that 60 level. You can see we failed, and the VantagePoint predicted RSI is now barely holding above the 50 level. So when we break 50 on the predicted RSI here, guys, we go lower on the euro. So again, if we're combining the technicals and the intermarket technicals and the fundamentals together, it doesn't really have us buying the euro currency at this particular time. Now, the exact same thing would apply to US Swiss franc, except in the reverse. It's an inverse correlation to the euro US. It's the same trade here, guys. Euro US goes down, US Swiss franc goes up. US Swiss franc, euro US 100% correlated to the dollar index. So if the dollar index is going up, we would be looking to be buyers here on the US Swiss franc currency anywhere near this 1.0080 level, just above the parity mark. And I would anticipate a return back up. I'm just going to redraw this trend line in here so everybody can see this. So we're going to draw our trend line back up at this all-important 103.20 level. Again, in my respectful opinion, I believe we are heading back towards that level and potentially beyond. Now that we have the non-farm payroll behind us, we have the Fed minutes behind us, which I agree with. The Fed minutes this week were a little bit softer, but that's the Fed playing games. We know that they're going to try and weaken the dollar, and every time they've done that, it has not been successful. It's the dollar's weakened short term only to come back even stronger. So right now, we've got, as long as we're holding above approximately the parity level, or 1.0050 to be specific on that level, buying into this level is reasonable. Our neural index is moving higher. We're holding above the zero line on our predicted MACD, and we can see the inverse move here on US Swiss franc compared to Euro US. While Euro US is breaking below the 40 line, we can see that US Swiss franc is pushing to the upside. So we're looking at 45.6. Once we get our predicted RSI above 50, we've got our green light to go ahead and start buying more of this particular pair. Barring any kind of fundamental in the market terrorist attack, we certainly, of course, have no control over these things. But again, the technicals and the fundamentals do support further longs US Swiss franc. Now, with the British pound US dollar, this pair next week is going to be a tricky one, but you can see that we have once again, buy the rumor, sell the fact, we have not been able to hold above this key vantage point level here. I'm just going to identify this so there's absolutely no confused in these levels that I talk about ahead of the market. Once again here, guys, nothing is late, nothing is lagging. All these levels are identified prior to the market even opening on Sunday night. So when we look at 123.39, that's the line in the sand to start the week. If we're holding below and closing below this, you can see we only managed to get above the critical vantage point level one day this past week. And once again, that spike occurred after we got the ADP report, suggesting the payroll number would be a weaker number. So you can see that once we did get the actual number, the very next trading day, which of course was Friday, this move to the downside continued. Now we've had multiple tests of the VantagePoint 18-day predicted moving average. You can see there's 4 or 5 tests of this area, and it's failed every day. We've closed above only one of the last 6 or 7 trading sessions. So the downtrend still remains in place, but this 122 level here, you can see that I have our trend line drawn in here so we can identify this area again ahead of the market. Nothing is behind the market here, guys. These levels are identified. If we come to this level, there could be a short-term long position here, but it's dangerous based around the ADP report, or around the non-farm payroll number, excuse me. So these are the levels to watch. Right now, I believe we're going to remain trapped between about the 123.40 area and this trend line support which comes in at about the 122 level. So a break of either one of these two levels should see the market move in that direction, but always be careful. This is what I tell my own direct clients. Do not trade heavily on Monday, especially after a non-farm payroll. We want to wait till Tuesday and get a feel for this to see how it's going to react. But right now, you can see that the people that were selling US dollars against the British pound on Thursday immediately reversed their position on Friday once we got the real number, the real non-farm payroll number, not the ADP report. So for now, watch those levels. You can see here our neural index is down, predicted MACD still below the zero line, and once again here, guys, I cannot stress enough how useful an indicator like the predicted RSI can be. You can see we have failed exactly on that 40 line, and now we're below the 50 line also. We're sitting at 42.1, so a break of 40. And once again here, guys, I'm just going to connect the dots so everybody can see, because I've talked about this before. The triple EMA cross, the predicted differences, the predicted MACD, follow it down to predicted RSI, and you have a forecasted move from VantagePoint from 126 all the way down to 122, a 400 pip move. So a fantastic call on VantagePoint. And when you understand how to bring all these indicators together and apply the intermarket analysis with basic fundamentals, you know, most market participants have their screens covered with things that they can barely even see the price because there's so many things going on. So right now, those are the key levels to keep a very close eye on for the British pound, because we could, not only could there be a decent long there, but there could be a fantastic short below 122. Now with the dollar yen, once again here, guys, this pair has basically 95% correlated to the Nikkei 225 and the S&P. As long as those two are going up, dollar yen is going to reverse back to the upside. Now, we managed to close out the week very impressive after a very, very choppy week on this pair, but that's what we can expect coming out of the first week back from the Christmas holidays, and still a lot of major market participants were out last week. So this pair managed to close back up. Excuse me, we've closed at 116.93, 40 pips above the key VantagePoint 18-day predicted EMA at 116.55. Closing above that level has us long. So to start the week, if we can hold above 116.55, then longs are clearly in play. We can see that our neural index is supporting that move. Our predicted differences are turning back up. And again, that predicted RSI is giving me a huge early warning sign here, guys, that this is getting ready to move back up again. We're at 53.8. A break of that all-important 60 level here will send us higher. Now, once again, I love showing things where, with this trade setup, that we've seen before. The predicted RSI, the predicted MACD, the predicted differences with the triple EMA cross. This was a phenomenal trade called from VantagePoint just 2 or 3 months ago. From the 104 level all the way up to 118.60. A fantastic call. And you can see that the key VantagePoint indicators, other than our shorter term indicators, our longer term indicators are still telling us to remain long on this particular trade. Now we have massive resistance up here at 118.60. If we can retake this, if I'm correct, and we start advancing higher, then 118.60 is our target, where we've got this significant resistance sitting up here. But if we break above 123, if we break above 2300 on the S&P 500, the dollar yen will be at 120 in a heartbeat. So always remember, check your intermarket correlations here, guys, to start the week. If you see that the equities are struggling, they're moving lower, then we don't want to get it. We want to wait before we get into our longs on dollar yen. Just take your time, let the market assert itself, but know those intermarket correlations, okay? When we look at the US CAD next week, we can see we have firm trend line support coming in at 131. Longs are still in play just above 131. We could have one more push to the downside, but we can see the indicators from VantagePoint are already starting to flatten out here. This move, another classic example of buy the rumors, sell the fact. We got the big spike up in oil prices, real money hammered oil back down, and then US Canada started to flatten out. Now the Canadian employment report that came out on Friday actually was quite horrible, in my respectful opinion. The jobs that were created in Canada were part-time jobs. There was, I think, 54,000 jobs across the country, and there was a very, very mixed report. And the unemployment rate went up. So right now, US Canada is at the mercy of your commodities, oil, gold. All of these things are driving factors for this particular pair. Our key VantagePoint level here to start the week, I believe we're going to retrace back to this level here. And when I use the word retrace, guys, it has nothing to do with Elliott wave, Fibonacci, Gann, or any of this stuff. We simply run out of sellers here, guys. That's what happens. They buy into this thinking they're going to get a better Canadian unemployment rate and a worse US report. That hasn't actually happened. It's the other way around. Now those same people even if they just take profit on this trade to start the week, that's going to send US CAD higher. So look for one more push potentially to the downside. I don't know if we're going to get all the way down to 130, 120, but that is the buy zone where I've got our trend line support coming in. And again, the indicators from VantagePoint are already starting to struggle, and if nothing else, we're going to retrace, very likely we're going to retrace back to this 133.87 level. Now, as we go into our other final two pairs, our commodity currencies, if I'm correct and gold starts moving lower, that is going to drag Aussie US and New Zealand US down with it. So when I zoom in this a little bit closer, you can see here that once again, buying the rumor here for the last 3-4 trading sessions, once we get the non-farm payroll number, all of a sudden the buyers are they're second guessing themselves here now, and they're thinking, should we be staying into this? So VantagePoint with the Neural Index and their predicted differences, looking at those 25 other markets, are saying no, I think that's probably about it. So to start the week here, where we want to be careful is, I believe that this top of this range here is going to hold. That's going to come in around 73.50, 73.70. Selling into that particular area is very, very reasonable. Now, if we take that same bar, which is basically right on that VantagePoint 18-day predicted EMA at 72.67, a break of this particular bar is going to see potentially a significant move to the downside. So keep an eye on that. Right now, the lower part of that range down around the 71 area, I think it's going to be difficult for Aussie US and New Zealand US to make any substantial gains next week. It doesn't mean the trend is going to reverse and it's going to go lower, because it is going to be dependent on what happens with not so much the equity markets, but more the metals, gold, silver, iron ore. They're going to be drivers. So if the money starts coming out of gold and back into the US dollar, Aussie US is going lower. New Zealand US, the same, almost identical trade here, guys. It's going to go lower here too. Now, New Zealand has been the stronger out of these two, but in this particular case, we can see we're closing at 69.55. So closing at 69.55, that's basically just below the key VantagePoint 18-day predicted EMA. So we may not see New Zealand US move up much at all on Sunday and Monday. We could see it slowly grind lower as that key VantagePoint 18-day predicted EMA holds. And again, this points back, we have to go back and look at Aussie US, because potentially there's an even better trade coming over here, because you can see that we've closed at 72.90, about 30 pips above the key VantagePoint level here on Aussie US at 72.67. So between these two guys, pick your poison, but they're basically the same trade. So when we look at this, Aussie US shorts are carrying a little bit more weight than New Zealand US, but it does point that if we get gold moving lower, silver moving lower, then both of these two pairs are going to go down with it, and that will indirectly push US Canada higher.